Hey, good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Monday, August 4th. I hope you guys had a wonderful weekend. Summer's almost coming to conclusion here. Wow, time flies. Hey, we don't have any economic news releases scheduled for today, but this is going to be a light week. We'll jump over to the headline news today. Stock market's currently down. It started up a bit higher and then it came down, and it's been kind of a little mixed, but as of right now, it was down slightly. So today is kind of taking more of the aspect of digesting some of the information we had last week from the GDP going at 4% when they're projecting around 2.8, to the lower job numbers than they anticipate with the higher unemployment rate, to the higher unemployment costs index. You know, they're kind of factoring in, they're kind of digesting some of the information last week. To also, we had the Portuguese Banco Espírito Santo. The Portuguese central banks came in. They're going to go ahead and resolve the issue that developed a couple weeks ago we had talked about, and they are going to basically split it up and dissolve the bank, basically is what they're going to do. So let's go ahead and see how this is affecting the bond market. As we can see, we had a nice little rebound. So we've been kind of hovering between the 102.09 and the 102.15. So remember, after that GDP, we had that huge drop right there. It actually got down to 101, like 09 range, 101.13. Huge, like 100 basis points drop right there in basically one single day, because they got so excited in the stock market about that 4%, and they forgot that the previous quarter was basically a negative number. So when you split that up, basically you're basically right around 2%, and what that basically translates is that the economy is moving at a very modest pace. So they kind of here's the thinking. Basically, they're looking at the economy is growing, but at a modest pace. So it's not going to probably make the Fed raise interest rates anytime soon, or any sooner than they initially plan. Inflation is still in check as of right now, as well as unemployment. Again, employment is gradually getting better as we see, but again, it's very gradual what we're seeing here. Kind of like the real estate market we're seeing at least in our market here, where last year we had huge influxes. We're kind of seeing it probably nationwide as we see the different indexes showing the much smaller appreciation growth. So homes are going up, but just at a more of a modest pace compared to last year. All right, folks. So basically, interest rates are a little bit better than what we had last week, at least compared to last Friday. So we do have a slight improvement in the interest rates today. So we'll see if this can continue this week, because it's such a light week. I would expect more something, maybe some earnings reports, which may or may not, because we're towards the beginning of the month, but maybe some geopolitical things like we've experienced with strategic defaults with Argentina, to what's going on with Ukraine and Russia, to the Gaza Strip. Some of those might be more of a factor this week, so be on alert. We do gotta keep our eyes and ears open, but as right now, we do have a nice little. We're back to where we were before for pretty much most of the July, as we can see. We're in that same range. All right, folks. You guys have a wonderful day. Thanks so much for watching, and I look forward to see you guys tomorrow. Have a great day.